Hello everyone, today's video is on SEIS, Seed Enterprise Investment Scheme. So what is the SEIS? Well, it's an incentive to encourage angel investors in brand new startups. So unlike the other investor tax incentives such as EIS and VCT, which are aimed at smallish companies, but even so, some of those companies can be a reasonable size of, circa £15 million, say. The SEIS is really targeted towards brand new startups where assets are no more than £200,000 at the time of raising the capital. So what are the incentives then? If you're an angel investor investing in a brand new business that's only got a couple of 100,000 on the balance sheet, that is a big risk. So HMRC say, okay, because you're taking on all that risk, the reward will be a really good tax incentive. So the actual tax break is 50% off your income tax bill of the amount you subscribe for the shares in the startup company. So let's say you put in £100,000 into one of these SEIS businesses. That will only really cost you £50,000 because what you do, you claim 50% of the 100,000 investment as a credit on your next tax return. So whatever your tax bill was for the year, just take 50,000 off that tax bill because you've invested 100 grand in this SEIS qualifying business. So a really good upfront incentive. Now then, at the back end, let's say you sell the shares in the SEIS startup after a few years. No capital gains tax, so CGT free when you come to sell the shares. HMRC say you have to hang on to the shares for at least 3 years, or they'll claw back that initial upfront income tax relief. But if you hold on to them for at least 3 years and then sell them, no capital gains tax at the back end. So these are really good for angel investors looking to take a punt, have a bit of a gamble on a brand new business, knowing that the downside is minimized by the virtue of the fact that it's only actually going to cost you half of what it would have cost you had it been if you'd put that money in a business that didn't qualify for the SEIS. So these were introduced in about 2013, 2014 by George Osborne when he was Chancellor, and have proved very successful over the years since. Unlike some of the other venture capital schemes like VCTs, there's no sort of mass market for these products where there are fund managers who have got a track record of finding these investments and pooling together investors' income to invest. This is very much you have to really find out for yourself where these companies will apply, which companies qualify. There's not, a sort of a place that you can go and find online a load of companies looking for the SEIS investor, unless you're looking at maybe angel investor forums, that sort of thing. But they don't tend to be a regular supply of them. So you've got to look hard. You've got to know where to look. The individual limits for investors are £100,000. So a company, they have an individual limit of £150,000. So each company can only raise 150 grand from so-called angel investors, and each angel investor can in turn only put in 100 grand. So for example, you could find 2 angel investors. One of them could do 100,000. One of them could do 50,000. But the total of those 2 angel investors can be no more than 150. And the total per one no more than 100. Or you could find 3 angel investors and ask them all for 50 grand each to get to your 150. So it's not a mass investment opportunity like with a venture capital trust where there could be hundreds of people subscribing into various different companies. With this, it's small number of angel investors, but the downside is minimized by the very generous tax breaks. So if you're a brand new startup and you are looking for funding, some equity funding, have a think about SEIS. The qualifying criteria is quite broad. You can be in all sorts of different industries. Yes, there are a few that are prohibited industries that HMRC won't let you have this SEIS, but a very large number of industries and sectors will qualify for SEIS.